Hey,
How are you doing,
we're
Paul?
live. Yeah, very good, thanks. Another weekly installment of Going Elliptic, and yeah, it was really fantastic. Thanks to everyone again who tuned in for the session earlier with Felix Hartmann. How do you think that went, Shanky?
I think it was great. I really liked Felix. He gave a really rich perspective, and not just talking about the usual coins and what one should buy or sell, but just giving a more thematic view and how he looks at the market. Yeah, I think it was fun. I think I would recommend everyone watch it.
Yep, likewise. There was some, as you say, not your usual kind of sentiments there, and even saying from having been so much of an ETH maxi into having a more divergent kind of view of the DeFi space. And if I had to pick one thing that I enjoyed the most, it was, his views on NFTs, which is a really great coincidence because we'd already lined up to record this week's chart ed as a NFT spring special.
Absolutely, yeah. I think it's fun. NFT is on everyone's mind for sure. It is also in the mainstream. Yeah.
No, seeing that mainstream awareness just kind of build really, I mean, for those of us that have been watching it over a year now, it's been building for months and months, but just the last 2 weeks have really brought NFT into being something that at least most of the general populace now understands as at least something to do with crypto and on a blockchain and about it being collectible. So let's see if that's a kind of crypto use case that does appeal to the masses.
It's true. Yeah, it's still early. Of course, there is plenty of hype. Everyone sort of wants to get a little piece of the pie. And, as we dig into some of the tokens that relate to NFT today, I think our viewers will get a sense of where that's headed, at least what the price is telling us, what the price action looks like. But yeah, it's definitely a topic everyone's interested in, and maybe this interest will lead to something as an interesting use case for crypto at large. So certainly.
Great. So I know you've got some charting, trading view things there. Should we jump in?
Let's do it. Let's get into NFT spring. Okay, excellent.
Right.
So I think before we jump into looking at any of these, Paul, it might be worthwhile for us to just sort of set the context and set the stage. And
sure.
Right. And I don't know how you look at it, but there isn't really a token that captures sort of the entire NFT sentiment, in my opinion. Would you agree with that?
Yeah, no, I definitely agree. And I mean, that was also a point Felix kind of made of they're all actually slightly different. So while they're in the NFT space, not all of them are returning revenues based on the usage. And so it's a lot harder to kind of class them all together, other than the fact that they are related to either works of art or virtual kind of assets. So yeah, it's quite divergent. There's not one token that really is capturing it.
That's true, yeah. And plus, they all have a little bit of difference in how they approach the NFT market. There are things like Chili's, which is more like fan cards. You've got, Engine and Axis, which come more from a gaming type of a background. From what I understand, Mana is a sort of Decentraland virtual world token. And then RARI, of course, is a marketplace. So, they all have a slightly different sort of play in the world of NFT.
Yeah, and RARI's also not the only marketplace. However, some of the other marketplaces don't have a token. So there's a huge amount of that kind of value that isn't being captured there either. But yeah, it's good to see how the different types of NFTs can still kind of fit together, and we can see that general adoption might cover all of those aspects of collectibles and gaming, as well as the kind of more auction-driven platforms.
Absolutely. Okay, so we've got this, whether, as you rightly said, whether it represents the market or not, it does represent a sliver of the market, and it's certainly representative of an NFT. So we've got Chiliz, ENJ, Mana, Sand, RARI, Axis, and I don't know how to pronounce that, maybe Digo or Dijo or Dago. And what we will look first is, when we were looking at DeFi last time, Paul, we looked at the correlation matrix because, the correlation matrix gave us a bird's eye view of how correlated are they, right? And the key piece there was if they're all correlated, does it even make sense to invest in all of them, or should you just pick up a small subset and just play with it, right? Because you might get the same exposure that you might get from collecting all these 10 different tokens. So maybe that's what we look at first. Why don't we start there?
Yeah, and I mean, that was definitely the most useful thing when we looked at DeFi last week, was seeing just how correlated everything was to Uniswap especially. So yeah, great to start looking at the correlation across those NFTs. And I expect it to be less correlated, but tell me, what are we going to see here?
Let's see what the data tells us. Okay, so same matrix, what we used last time, we plugged in the NFT tokens, the ones that we're going to study today. Chiliz, ENJ, Mana, Sand, RARI, and Axis and Diego. They're all positively correlated, which is not a surprise, right? Because the entire crypto market is kind of positively correlated one way or the other. They all move together. So that definitely is just expected. What we do see here, Paul, is that there are some of them which are, of course, more correlated or tightly correlated as compared to some others. So, if we just look at these numbers, I think we get a sort of a quick view of that.
Yeah, and that's on a daily time frame as well, right?
That is correct. Yeah. So I think you make a good point there. Not all these tokens have been listed for a long time. So unfortunately, I had to restrict the data to a smaller set. And picking up hourly or small time frames sometimes makes no sense because each one of these are fairly volatile, and they have their own course through the day. The daily one certainly is a good enough measure to show how the token price has been behaving, what the price action has been. And if we correlate on that level, I think it gives us a fair sort of sanity check of, are they moving together, are they diverging, are there similarities in some sense in terms of trader expectations. So I think that's what is worthwhile to look at. So here I think there are just 3-4 things that are worth sort of checking out. One is that definitely things like Chiliz and Mana and ENJ are very correlated. They're all numbers upwards of 60, which is sort of a clear message out there that they're all moving together, and investors are seeing them as sort of in the same category. And perhaps the price action in terms of buyers and sellers and their interest is matching across those 3 coins. There's also correlation with Sand. Sand and Axis and Dago also are in the similar category, but little less correlated. But nonetheless, they're all positive. They're all 50 plus. So those numbers really don't mean anything more than that, right? It's not like if something is 53 and 58, there is a world of a difference. Given that the data is sort of limited, and obviously we are looking at a volatile market. I think the key thing to see here is they're all 50 plus, so they're all pretty much moving together. The only thing that I see here is that RARI is moving slightly differently as compared to the pack. So that's the only one that's showing a little less correlation, if you may, right? In the 9, 10s, 20s type of zones when we start looking at each coin. This is the sort of RARI column, or you could look at the same thing in the RARI row way, but I think it's here. So we can move this. And yeah, so, if you look at either way, it's the same number. This is a symmetric matrix, if you may. So if you look at RARI, either the row or the column, it becomes clear that this is the only one that's behaving slightly differently as compared to the pack.
Yeah, that's interesting. So being the only kind of platform token that's there across these that we're looking at, it does seem like it's at least getting less of the attention. and less of the price action as compared to what we're seeing where those others are potentially at least capturing some more of the value of the underlying kind of assets or NFTs that are being created.
That's correct. Yeah, I think that's a fair assessment. And also that's sort of expected, because if you look at the economics of a marketplace as opposed to economics of, let's say, a game venue and a game token or a virtual world, they're bound to be different. Not trying to say one is better than the other, but they're just necessarily bound to be different. So I think the traders are factoring that in, and it's also aligning, I would imagine, with how they are perceiving digital art and NFTs at large. So certainly, I think things like Mana and Engine and Chiliz are perhaps closer in that sense to digital art and its direct play in terms of fan tokens and sort of game artifacts and collectibles being sold, and they're actually producing them in some sense, right? Not only marketplaces. So that's probably showing in the price as well.
Great. Well, should we jump in and look at the largest of the bunch there, which has to date been Chiliz, in terms of at least the size of market, right? They've really ballooned in market cap there.
That is correct. Yeah, let's start with that. It reminds me of the conversation earlier this morning when we chat with Felix. And when we chatted with Felix, I think he made an extremely interesting point that, Chiliz is building its energy around essentially sort of fan cards for soccer clubs or football clubs, primarily clubs like Real Madrid and FC Barcelona and Bayern Munich. And when it hit its all-time high a few days back, it was more valuable than all those clubs combined, which was kind of both, funny and interesting at the same time. So, so there we see. I think this is where it was.
Yeah, and it's interesting because there are obviously more ways to value the brand around a football club than just their kind of straight value. And there's that kind of whole ecosystem of licensing rights and how much people pay for broadcast rights of different bits of content. I think we probably need to add those onto the value of the clubs themselves and then still see if Chiliz is exceeding all of those. But I definitely agree with the point that it's hard for the market to price this correctly at this point, and we can see the market pricing it higher than the actual brands that are represented and behind.
True. Yeah, absolutely. So I think let's do different indicators this time, Paul. We have looked at a few, right? We have looked at, of course, moving averages. We've looked at RSI. We've looked at MACD. We also picked up some, standard sort of trend lines and support and resistance levels. Why don't we do a little bit of course, trend filtering, which we'll not spend too much energy on because that's sort of very evident from just looking at the chart. It is trending upwards and it's, in positive territory and a very strong trend rather. But then we can dig into this chart and a few others using a couple of newer tools. Let's go with Stochastic. I put that out there already. And let's also look at the Fib retracement levels, the Fibonacci retracement, which is also extremely popular in the sort of trading world, a commonly used indicator. And I could also add my own nuance to why they're, interesting.
Yeah, that would be interesting because, I've seen both of them, obviously more from an RSI perspective, but always, they seem to be on the charts that people are posting, and it would be good to understand a little bit more how to read them myself rather than always rely on the analysis of someone else. So, let's jump in.
Perfect. Okay. So first things first, in terms of price, like I said, it's a no-brainer. It's a strong trend. It's very clear out here. If you start looking at, the standard sort of moving averages, this is, by the way, 20-period moving average. So I guess we don't even need to map others. The chart is clearly above the 20-period moving average. It's a very strong trend. And so obviously, if you put in a 50 or a 200-period moving average, the chart will still be up there and will just say the story that 20 EMA is already telling us. as I said, it's sort of evident. We don't even have to draw these MAs. It's very clear from the chart that it's been a parabolic growth for this token, and in line with most of the rest of crypto. So let's look at stochastic. That's what we said we look at. I already plotted the stochastic out here. Before we try and understand what the stochastic does, let's try and understand what the stochastic is, right? So the stochastic is firstly a momentum indicator, right? So that's an important thing to understand, and it studies the momentum of the price. It's not studying the price itself, but it's essentially studying the momentum of the price, right? And so in that sense, it is closer cousin of things like RSI and MACD rather than a moving average, which is just showing the price action or price movement, or even a fib retracement, which is directly trying to study the price. So as opposed to that, the stochastic is a little more focused on the momentum. And what it really does is, for a given time period, typically 14, sometimes some people like to take 20 days. This one is set for 14. Maybe I can show the settings here. So the time frame is 14. And there are two sort of lines that make up a stochastic. One is called the percentage K line, which is the primary stochastic line. And a second line, which is called the percentage D line, which is sort of a moving average of the percentage K. So it's a smoothing line, okay, right? And sometimes people like to say, traders like to use words like the fast line and the slow line. And the percentage K is the fast line because it's tracking right now, right? It's every day's prices. Percentage D is a smooth moving average. And so, it's supposedly the slower line, which makes sense because it's averaging out last few candles or few time periods, and just sort of putting it together. 14 is the standard number of bars or standard number of candles for percentage K, and usually three of those, three of percentage K data points are used to form a sort of moving average, and that's the D line, right? And so that's why you see a smoothing factor of 3. Yeah. The other thing to see is most charting software. I mean, this is TradingView. We've been using this in the previous sessions as well, but most charting softwares like this, sort of color pattern, if you may, for a percentage K and percentage D. The percentage K line is usually the blue line, and the D line is the red line. So, there are two lines essentially, the blue and the red. Some people like to also call the percentage D line the signal line, sort of using analogous terminology to MACD, which uses the concept of a signal line. And so sometimes some people also call the percentage D line as a signal line. Now,
right.
Yeah.
But you wouldn't see it as a signal if it crossed over, right? It's not the same in that sense.
Well, we'll get to it. There are actually 3 different ways of using the stochastic indicator, and let's discuss that for sure in a couple of minutes. What are the 3 different ways, right? Like what can you do with it? The one thing I must say though is don't blindly trade using the stochastic. Okay, the stochastic is not indicator that's confirming any kind of exact price movement. It's supposed to just give you a richer context. So if anybody's just using the stochastic and automating the trading strategies, it's probably not the smartest thing to do. But let's go back to the stochastic and see what it's doing. So for this period, for 14 days, what it really does is it keeps a running counter of what's been the highest, right, and what's been the lowest. So obviously 14, if you're looking at the day time frame, which is what we're looking at here for chilies, there will be 14 candles, and for each of those 14 candles, we'll have an OHLC, right? There'll be a open bar, there'll be a closed bar, there'll be high and the low. And so the numbers that really become relevant is the high, the so far running high, and the lowest, right? The highest and the lowest in these 14-day period. And then there is another thing that becomes very important is the close for that particular day. So if we are going to do the stochastic, let's say for today, we will look at today's close. We will care about the highest in the last 14 days, and we'll care about the lowest in the last 14 days, right? And then what we do is we take the ratio. So we say, okay, close, which is today's close, and let's see the difference between today's close and the lowest in the last 14 days. So it's basically a C minus the lowest in the last 14 days, or the lowest in that period. So instead of 14, if we did 20, it will be the lowest in the 20-day period. But right now, let's stick to 14. And we compare that to the maximum range, the highest minus the lowest, right? So in other words, if you just look at it logically, what the stochastic is saying is, in the last 14 days, the range of the market has been so much. That is basically the difference between the highest in the 14 days and the lowest in the 14 days, right? And what it's saying is, how far is my close to the lowest as compared to that range? Am I right up on the range? Am I almost back at that range? Am I way down there? Am I somewhere in the middle? Right? And since it's a ratio with a percentage on it, the value has to vary from 0 to 100. And so it becomes a nice indicator like the RSI or the MACD, which ends up, sort of creating certain watermarks and says, hey, if it's above this watermark, perhaps, it's at a certain level, typically translating to a sort of overbought type territory. And if it's below a certain watermark, it's oversold, or, some other sort of interpretation that you can make. So that's the sort of fundamentals of stochastic, right? The percentage K, the percentage D, and the stochastic. That's what this indicator is trying to do.
Great. And so, what's it telling us in this, kind of last 2 weeks? So obviously, we've got a big run up there. But yeah, how would you be reading that since, say, the start of March?
Right. Yeah. So that's the great question, and that's the one that I was, sort of alluding to a couple of minutes back. That there are different ways of reading the stochastic indicator. Typically, there are 3 ways of sort of reading this. One is the classic sort of crossover, cross under, just like we use crossover, cross under for MACD and the signal line, or we use it for even different period moving averages. If you go back to the sort of theory of stochastic, there are 2 lines. There's a fast line, which is a percentage K, and a slow line, which is a percentage D. So the way to read this is, if the fast line has crossed over, well, perhaps there is a bullish momentum, right? And if the slow line has crossed over, or in other words, the fast line has crossed under, then there is a bearish momentum building, right? So that's one way to read it. The standard sort of, blue above red, well, maybe the market's moving bullish. Blue below red, market's going bearish, right? But again, one should not look at this in isolation. It has to be seen in the light of the broader sort of price action. So in this particular case, for example, the market is trending upwards. The market is bullish. And so even if the stochastic was indicating that we have, cross unders, the crossovers, it will have sort of limited amounts of inference that you can draw. Now, what you can do, though, is the second way to read it, which is essentially look at the price and the stochastic. So if you look at the price, and again, price in this case, if we study here, the price has essentially been upwards, at least in this territory. This is the beginning period of March, where it went parabolic from, I think, from under 10 cents all the way up to almost $1. And then it corrected back a little bit. And then, of course, it has still remained way up high as compared to where it started, which was less than 10 cents. It's still in the sort of 50 cents plus territory for the most part of March. Now, of course, you could argue here in this period that perhaps there is a bearish signal building. Again, the data points are too small really to sort of conclude, but you could say, well, there are lower highs. Here was sort of a high here. The second high is lower than the first high, and we have yet another high which is lower, and there is lower lows as well, right? So maybe this is getting a little bearish, and we might see a little bit of correction. But having said that, because it's above EMA 20, as a sort of trader, I would say, well, hold your horses, right? Don't try to read too much into this. It's still bullish. It's probably just seeing a pullback, right? And it's just maybe retesting the EMA 20 level. Now, going back to the stochastic, if we saw a movement where they were diverging in the sense that, this chart was perhaps going up, but the stochastic was going in the other direction, or, vice versa, where this one was going down, but the stochastic was going up, then that's another way to read the stochastic, where you say, hey, the stochastic and the price are diverging, right? Because they were not moving in the same direction. And that perhaps means that there is a reversal coming. Is this an early indication of a reversal? And one of the things to look at this is usually the momentum precedes the price action. So, momentum builds up, you start seeing a certain kind of, speed or velocity at which price is changing, and then you start seeing the price itself change. So obviously, if there is building momentum and also divergence, then yeah, that could be a signal that the market's going to turn. There might be a reversal. So that's a sort of second way of reading it. And the third one that we have seen with other momentum indicators is this classic sort of overbought, oversold. We did see these regions which have crossed the 80 watermark, clearly showing that it was overbought. Early on, the price was sort of all range bound, hovering around the sort of 2 cents range, I think. So we didn't see much price action. But later on in this big bull run, the big parabolic run, certainly it was close enough to that watermark again. And that's sort of evident because perhaps people were jumping in and buying, and that buying pressure really took the price all the way up from 10 cents to $1. Last but not the least here, it was also evident from the volume profile. If you look at the volume profile, the sort of histograms here, obviously these histograms are way larger than everything else around it, clearly showing that there was massive buying momentum with a large amount of volume in this period from, I would say, 1st March to about 10th of March. And then it seems to have subsided. We are not seeing the same type of volumes anymore. The price has kept above the EMA 20, so it's still sort of staying strong, but there isn't as much interest as there was in that earlier March period. Plus, of course, also we see that we're close enough to an oversold territory, and then the price also pulled back. So I think when you combine all of those, it certainly seems that there was a pullback, and maybe now there'll be a newer price discovery, and it might start settling out, somewhere in this new price range of 50 cents or so. So that's my read. That's what I would say in this case.
Yeah, no, that's definitely interesting, and yeah, useful to see it from the context of the stochastic kind of lines there, and that potentially that most recent crossover there is kind of indicating it's oversold.
Yeah, perhaps, and which essentially means, again, its overall trend is positive. There isn't necessarily too much volume or sort of momentum action there, so you might see it go up, right, and just at least stay positive, the EMA 20 territory. Should we jump on the next one? Maybe we look at engine, and then we look at the fib retracement and a couple of other things in light of that next coin, the engine coin.
Yeah, engine and also mana are quite interesting in that they've been around a lot longer. Engine also having done an ICO back in those days, and built out a bit of an ecosystem with wallets and everything else around that gaming aspect. So yeah, it's a bit more data, but a very similar kind of shape to the chart. Do you want to bring that one up?
Let's do that, yeah. And you're right, both mana and engine have a little bit of a history, certainly longer history than some of the other NFT-centric tokens, and let's see how they're reacting to it. So one thing that jumps at me here, Paul, just looking at the chart, is we do see a parabolic growth here as well, but I don't see the unusually long candles. In fact, what I'm seeing here is there is a lot of big candles, but sort of consistent growth ups. So, if you start seeing from this late February, early March, till almost 15th March, I see nice, good, healthy greens almost every day with minor pullbacks, some dojis, some sort of indecision points, but mostly sort of nice, good, healthy candles for most of this period, which tells me that I think there has been more, I would say, consistent interest, at least in the 15-day period. Right now, the 15-day period is a 15-day period. One should not read anything more than that, but certainly there's something to learn from it in terms of its consistency.
Very cool. Yeah, I can definitely see that is, still one of the biggest kind of trend points in Engine's history. But as you say, it's kind of built more steadily day on day rather than one giant candle in a given day.
Exactly. Okay, so let's also study this and the retracement from a standpoint of the fib, or the Fibonacci retracement. So the first thing to understand, and maybe I'll just draw it out, and then I will talk through what the fib does.
Cool.
The fib is a popular one. I think a lot of people like the fib. So let's go, let's say from here, around 24th of Feb, when the action started, to the highest point here, right? So I think I got this. Okay. I almost got this. Maybe this is not 100% there, but okay. So let's first sort of step back and look at what the Fib does, or the Fibonacci retracement is, and then we will try and understand what story is it telling us right now with respect to this chart. So first things first, Fibonacci, of course, has this sort of fancy mathematical context with it. The idea of golden ratios and the idea of the Fibonacci sequence. And as of course, I think most people have heard of it, but I don't know if everyone's aware of it. But Fibonacci essentially is a sequence where you start with 1 and 2, and then the last two add up to give you the third one, the next following one, and so on and so forth, right? So you actually start with 1 and 1, and you see 1 plus 1, 2, so the third one becomes 2, and your 2 plus 1 is 3, and 3 plus 2 is 5, and goes on and on, right? Fibonacci has a lot of different stories and a lot of different ways that's used across board in various sciences, including, I understand that that's how the rabbit population grows. So you have to make sure that they are checked, otherwise they would come and take over the land. So it grows rapidly. So anyway, so let's look at how price action studies that. So what price action really is saying, firstly, let's get to the sort of sentiment behind it, why even look at Fibonacci, and then we look at these levels. So the price action general sentiment is that whenever there's a massive sort of either upswing or downswing in price, right? So either it suddenly goes like a parabolic up, or a major fall. The expectation is that there is a certain behavior in the price reverting back towards a stable point. Now, this theory is, by the way, used in many other sort of trading strategies, even including mean reversion and a bunch of other strategies. Where the idea is, or for that matter, even when we look at trends like EMA 20 and we say there's going to be a pullback and go back up, we are essentially sort of assessing the amount of retracement or the amount of pullback that would happen. And the fundamental idea there is the market doesn't just move up in one single line up or one single line down, but if it does move up in a major sort of bullish move up or a strong move down, it is going to retrace back, right? And it's going to recover some of that lost ground. Or in this case, if it has gone way up, it's perhaps going to shed some of it, right? And so then the question becomes, how much will it shed, and in what proportion? And what Fib does is Fib takes the science of Fibonacci numbers and sets these levels. And the levels are essentially created, once you start running into the Fib series, you will see that the ratio of two Fib numbers ends up becoming 0.618, which is essentially the sort of the number, the favorite number, Fibonacci number. Actually, it's not 0.618. I think that number is 231, I believe. This number, 1 minute. The 23.6. And then the next one becomes 38.2 and 61.8. And then sometimes there are two other numbers that come in, which is basically square roots of those numbers. So if you take a square root of 61.8, I think it becomes some 0.7 something, 776 or something. And then if you take a square root of that again, then it becomes 0.88, right? So again, the math can be figured out. You can Google search for it and you'll find it. That's not the most interesting part here. But the important part is that science gives us certain levels. So in some sense, it helps us draw out these watermarks, if you may, right? Now, you could come back and say, why these? Why not something else? Well, sure, you could draw something else. And one of those something else could be just support lines and resistance lines. So if you don't like the Fibonacci, right, you don't believe in it, but you still believe in price action and technical analysis, your way of approaching the market could be, well, I'm going to look at the last support point. And that's the point I think it's going to retrace back to. And I think that's fair. That's completely fair. That's another way of studying it. And this is yet another way, right? So this is another pattern that can be applied. Now, if you look at the Fibonacci, what this is saying is, from here, the beginning to the end, if you think of this as 100%, the first retracement point is going to be about, shedding 23.6% of it. And we did see that. In fact, right after this peak, the next few days saw it touch that 23.6 level. And we saw further correction. It even fall down to the 38.2. And then finally, it's come down to, hovering in the range between 38 and the 50% retracement. At this point in time, the market continues the way it's continuing, and especially for, let's say, a coin like Engine, I would expect it to be in this territory for a bit. But if it starts seeing correction, for whatever reason, if we start seeing some bearish momentum further down the road, it will not be surprising for the price to again test and come back to the 50% mark since its highest point, or even 61.8%, the favorite sort of Fibonacci retracement, where it's expected that most of the upswing is sort of retraced, right? 60% is retraced. Of course, that's not all of it. They could be a 78.6, and in the world of crypto, they could be all the way back to where it started, right? All of those are possible. But at least this gives you a mental model in terms of what are the price levels you should look at. These are not etched in stone, right? Don't trade just basis that, but watch them is what I would say.
Yeah, and we've got one question from the chat, which I'll bring up here as well, which I think kind of touches on that, is like other indicators or things like support lines, is there a kind of like-mindedness of why people look to things like Fibonacci, or why markets kind of tend to align around these indicators? Is there something behind that for Fibonacci that gives it more likelihood of being a good indicator?
That's a great question. So see, ultimately, there are three things that happen in every market, right? And that's something to sort of keep in mind. One is, of course, the non-stop tussle between buyers and sellers, right? So there are some people who are always bullish at a given point in time, whatever price point that is, right? There's a certain demand for it at every price point, and you can think of it as a classic sort of demand curve for that token or that instrument. And then there are sellers, right? There's the bearish momentum, the opposing side. And sometimes, the bulls are in control, and sometimes the bears are in control, which in other words essentially means there is more buying interest as opposed to selling interest, and more selling as opposed to buying interest, right? And you could also argue that and extend that argument to say, well, first thing is, if there has been so much buying interest, right, ultimately that buying steam is going to run out. And it may run out because of a couple of different reasons. Everybody who had to buy has already bought it. That could be one, right? So they have sort of pushed the sellers further away, and away, but there comes a point where they don't have any more buyers to kind of, take it further up, right? So that's one way to kind of think about it. The other way to think about the market behavior is that when you start getting into this tussle, and even people who are buyers at a certain point in time, they might want to take profits at some other point in time because they feel like they've already either had a good return on their portfolio, or they feel like it's already reached a point where it would retrace because of the sentiments of the market. And so then there would be a natural sort of behavior of pullback and retracement that would happen. And then the other part that one should keep in mind is that a lot of this trading, especially when it comes to the market, behaves on sentiments, right? And some of the sentiments really sort of varies between these sort of patterns that have happened in the past, right? As they say, the history doesn't repeat itself, at least it rhymes, right? So which may be true in this case, because history can't repeat in the case of Engine or Chills. It's never seen these prices. So, this is probably not the right way to sort of read any historical data, but you could look at the pattern, right? And you could look at the patterns within not just crypto, but any other instrument. And well, it's rhyming, right? And so now you could say, well, which rhyme is it going by, right? And so these are all rhymes. Think of it that way. Technical indicators just telling you rhyme points, if you may. Support resistance are rhyme points because that's the behavior we have seen, where either buyers or sellers have found, points where they sort of give up, or there's Elliott wave, which has its own interesting sort of science. I'm not a big believer of Elliott wave myself, but a lot of people do. And then there are things like Fibonacci retracements and others, which are also giving you those same things in terms of, hey, it's going to rhyme here because this makes the right sort of behavior, right? This has, again, the classic sort of ratios and the classic sort of movements that has had a pattern, right? That people like to go with. So that's a sort of, way to parse this, a way to think through this. What's important, though, and extremely important to understand, is that do not think of these or any other pieces as hard science. It is not hard science. These are all indicators, as the name suggests, and what they're really telling you is they are just giving you tools to infer and read the price action. The other part also, which is important to understand, is that many people would combine price action with other things that they're aware of. For example, they would combine price action with say something like, the information about the market, or, some of the fundamental, I'm hesitant to say fundamental in scenarios like this, because it's difficult to gauge it, and in some cases, it's not even clear what the fundamental is. But at least the market sentiment at large. So I think that also plays in. So both sort of come together, if you may. Paul, did I lose you there? You're still around?
No, I'm back.
Okay. Sorry. Yeah. I know sometimes the connection can get spotty. So hopefully that answers the listeners' question. But I do feel, and I must mention that I think things like Fibonacci or any of the momentum indicators are good tools. Definitely use them to understand where you might end up seeing some price action, right? And again, don't think of them as an individual line. The best way to think of them is as areas of value, right? So if you start seeing some retracement, watch it and see, is it going to retrace, 23%? Is it going to retrace, 30%? What if 38.2%? Or is it going to go all the way 50%? And if you start seeing the price moving in that direction, you can certainly start having those as, in this case, for example, those could become your entry points, right? So for example, if the market is still trending up and you're looking for a pullback and a good point to enter the market and again take the next swing, that's a good point. Just go with that, and that becomes an area of value to kind of jump in and then get on a trade or a potential trade, right? Okay, let's jump on to the next one, which is, what do we have next? Mana. All right. So Mana, like engine, again, has some history. It's been around. I believe it is like a virtual world coin, isn't it? This is the Decentraland coin.
Yeah, I mean, they had two assets there, the actual kind of land itself, and then Mana being more of that kind of currency used within Decentraland. But since some of the NFT artworks are looking for a place to actually be displayed, there's not just the NFT objects in Decentraland, but also some nice almost economy there, some virtual galleries and interesting things happening. So I think that's why they're also capturing part of this NFT wave.
Absolutely, yeah. And even back, I think around 2017, I understand when they came about, they were quite an interesting token, right? With the idea of virtual world, and I also believe they had an interesting movement type of a history with they coming out of Argentina, where there was a sort of a call it like a cypherpunk type of a movement, if you will, right, around this whole Decentraland and Mana. So they've got an interesting a community and following of their own. Which I think, yeah, definitely aligns well with NFTs. So, okay, coming back to the price itself again, we'll not try to get lost into the whole sort of social dynamics there, but this one also saw a massive bull ride up. Pretty much every NFT coin seems to have seen that, right, in the beginning of March, right? Again, from March 1st to March 15th, we saw the price move all the way up, peaked out. And here, in fact, if you see, the price has retraced back quite a bit, almost closer to the 50% mark. The price is also a little bit more range bound in some cells. You could perhaps draw out, price points here. There's certainly a resistance, I would say, somewhere around here at about a 1.17 mark. And I could perhaps draw that. So let's do that here very quickly. Look at horizontal.
The only thing I'm noticing that's a little bit different to CHZ and Engine is that there is quite a strong green candle from day before yesterday,
correct,
which is kind of bringing it up higher, where some of those others ended lower for coming into the end of March.
That is true. Yeah, so it does seem like there was a massive price correction till around 25th of March. And then we saw 3 days of bullish candles, bringing things price all the way back up to that sort of resistance level, right? So it did bring it back up closer to that. I think this mark is about 1.15, which is interesting. And then again, we saw some profit taking perhaps here, with a red candle beginning today, I would say. Okay. So yeah, this is interesting. This price action is interesting. Again, the EMA 20 is a good mark in my opinion. It's probably going to retest it like it retested here, perhaps, close enough in this area. 25th, and then this was 26th. So both these days, and it's possible that it might retrace back. But I think this is a good one to at least keep an eye on. I certainly see the bullish momentum continuing. Nothing has changed. The trend is still strong, and of course, the price is going to move a little bit before it finds its next levels or next points. Let's quickly run through the others. We have taken a bit of time on the first few, so I think we will just rush through those, and then maybe quickly look at the DeFi.
Yeah, and those first 3 plus, kind of sand definitely make up over 75% of the total market cap for these NFT tokens. So it starts to get a little bit smaller and definitely single digits below sand and RARI.
Right. Yeah. Okay, perfect. Yeah, so let's look at the sand. Like I said, let's not spend too much energy here, but certainly, again, just by eyeballing this chart, there are 2-3 things very evident. The trend is strong, looks very similar to the other ones. Maybe we can even compare them, right? So let's maybe compare sand to Mana. Let's see how it does. So if I just compare Mana USDT, I think both are USDT centric. And let's say same percentage scale. There you go. So Mana is the red one. So, okay, so it did not necessarily correlate early on, but I think here it seems to be trending in the same direction. Maybe we stick in the engine as well. This is an interesting. If you look at engine. Aha, so that's something interesting. So you see engine and Mana kind of move the same way. They are extremely comparable, especially in this bull run starting March 1st. Sand isn't exactly tracking it, but of course, it's not very different. And, one should not expect them to be 100% the same. But yes, they're all sort of going up in same way with small pullbacks and, still tracking above EMA 20. So I think they are in good shape, all of them.
Yeah, and for assets, that are kind of at that 0.6 correlation, I think that's, about in line with what I was expecting to see there. Some divergence in terms of the scale, but generally the same trend.
Correct, yeah. Okay, let's look at RARI, the last one. I've cleaned up this chart. There's just too much noise here. Let's get these out. Let's look at RARI. So see, this is interesting. We also saw, if you remember that correlation matrix, that this was the one that was slightly less correlated when we looked at the last 20 candles or the last 20 period, last 20-day prices. And what we see here is that this one did breach the EMA 20. So it did see a little bit of bearish momentum, or at least a pullback. I wouldn't necessarily call it a bearish momentum because it recovered from that pullback. But let's see how far did it go. So, maybe we can plot the moving average, which is 50. So let's get with this here. Okay, yeah, so it even tested the EMA 50, right? So for those 2-3 days, it did look like there was a big pullback, right? Where the price came all the way back from about 45, which is where RARI was. In fact, it had touched even higher than that, perhaps an all-time high of almost close to 50, like 48. And it then went all the way back to about 20. So it, more than halved, right, in that period. And certainly, I think this pullback was very strong. There were red candles day after day. If you start looking at Rarible from 15th all the way to the 23rd, there were literally red candles every day with a couple of dojis in the middle, right? The indecision points with minor greens on 2 days. Which so again, that, right, sorry, go ahead, yeah.
Yeah, that looks like it's something more than just, say, profit taking, right? It looks like people perhaps changing their thematic kind of thesis around NFTs, perhaps to the benefit of some of the others.
100%, yeah. So again, I have not been tracking RARI really closely in terms of anything beyond this price chart. So I don't know what happened outside of this price chart, but you are spot on. Given this sudden sort of price correction, certainly a couple of things may have happened. One, there's something wasn't right with RARI, which I don't know. So, I shouldn't essentially sort of should dig into it. Let's put it that way. And the other one is perhaps the marketplace has increased, right? We've seen other marketplaces come up, right? There is OpenSea, I believe, that is becoming big. if I have the names right. There is Cent. There are a few others that have come up, right? And so it's possible that as those new marketplaces are coming up and becoming popular, and in some cases sometimes specialized, maybe the buyers at some point and felt like, hey, this is the action is going to move to other venues, so let's move away from this. So it's possible that that's what happened. If you look at the stochastic, also obviously there was oversold territory, right? There's the straight down line went all the way down to an extreme oversold area for a little bit, and then sort of it's recovering and coming back into that healthy price zone. So yeah, definitely, I think this is an interesting one to just at least keep in mind and study this a bit further, the RARI one.
Great.
Should we jump back at DeFi a little bit? We've covered a bunch of NFT. NFT spring is on for sure. I would certainly say that I think the trend is strong. There's absolutely no two ways on that. And the price action that we are seeing in terms of minor pullbacks and other kinds of things are just natural and normal behavior of the market. Nothing goes up and up, or down and down, and so it's just a little sort of corrections on its way up. But yeah, purely looking at the charts, it looks like it's heading strong, and the interest continues, at least as it stands today. And we can revisit this week out and see what's happened to the world of NFTs. Is the craze still continuing? Has anything changed? And how things are looking. So certainly we should go and revisit that at that point.
Yeah, I definitely think we're at the start of something, and whether that lasts through spring or spring and summer, only time will tell. But yeah, it's an interesting first kind of snapshot there. Let's revisit kind of the core DeFi. These are the ones that we look at almost every week, and kind of chart there against synthetics, Aave, and Maker.
Let's do it. So let's maybe start with Aave, the one in the middle, and quickly look at the other two. So first things first, if you recall from last week when we were plotting these, Aave, Maker, and SNX were highly correlated. They were one bundle, and then Uni and Sushi were the second bundle, right? And which kind of made sense.
Right.
These were lending, collateralization, yield farming type of venues, and the other two are more the standard sort of AMM and swap type venues, right? So in some sense, there are sort of two types of venues in the DeFi world, and SNX, Aave, Maker sort of moving in tandem or moving in a similar way is not surprising to that extent. We also sort of put out some price predictions middle of the week. From last week, if you recall, we were saying it's going to touch the 50 and maybe even come down to the 61.8% retracement. My money is still on it. I think that it's probably going to retrace a little bit down to almost 61.8%. The price chart is sort of confirming it, right? So if you look at this, two things have happened here, and we're just going to focus on this more recent days because we did study this quite exhaustively last weekend. And for anyone who's interested, I would suggest go back and look at that video. I think we covered this in a decent amount of detail. What we're seeing with Aave is that Aave certainly went below the EMA 50. So after staying strong and the massive sort of price movement up and even touching closer to a 580 level, it corrected substantially down by almost over $250 value, and getting back down to the 300 type territory or 300 range. And if you remember, Paul, last week, in fact, this chart is still from last week, I'm just left it the way it is. We drew this sort of support line right here at about 302, just looking at how the price had behaved. And, it sort of has respected it over the last couple of days. It retested it and it's gone back up. And I think that this area, the 300, roughly 300, again, it's not exactly one line, but roughly around 300 is definitely an area of value. So certainly watch out for this roughly in the 300 zone. And I wouldn't be surprised if this moves further back down, retests, and keeps finding its new price point. What we're also seeing here, which is very interesting, is the two moving averages have sort of merged, right? And the candles have become super small, right? And both of these are interesting things in general. So one is that we'll see if there's a crossover, right? Are we getting into bearish territory, or is this just sort of kissing of the two averages and then again diverging? where it becomes bullish again, right? So that's something that we should keep an eye out for, because these are very close. They're almost tracking the same level at this point in time. The small sort of candles typically also imply that, it's either distribution or accumulation phase, just there is indecision in the market. People are unsure where this price should go. And, this usually sometimes also leads to prices breaking out, either breaking further down, and maybe that's where my thesis that it'll go and retest the 61.8 might happen, or it might break up and we might end up seeing again back up into this super high prices, upwards of 400 and 450 that we saw a couple of weeks back, or like a month back or so, especially in February. I think Feb was the most bullish period for Aave. So that's my 2 cents there. I am tempted to actually also look at the MACD curve, because I think the MACD would tell us where another sort of pictorial representation of the action, which kind of makes sense. These have almost died out, the histograms. They are super small here. Then let's see which direction it moves in. Okay, let's quickly look at Maker and SNX to complete this story. I'm going to bring back Stochastic. Here is Stochastic. Okay, so let's look at SNX. Look at that. I mean, this is again similar, but SNX is a little more bearish than even Aave at this point in time.
Yep, that's sitting, about where you put the support level last time, if not a bit lower. So, yeah, it's not had a kind of final up leg there. So more likely to stay with the small candles in that range.
Yeah, my guess here would be, again, looking at the price action, this sort of turning a little bearish. In fact, I think there is a crossover, isn't it? Yeah, there is actually a cross under, if you may, right? The 20 EMA has crossed under the 50. Again, this is very recent, so no point reading too much, but certainly this is an indicator. It's also oversold, right? So if you combine the two, there's definitely some bearish movement here. The 14, roughly about 14 price point is also its fib 61.8% retracement from the all-time high it reached. And so I wouldn't be surprised if it comes back in this area of value. But I'd probably say $14 is the point it's coming back to. This is my guess. So again, never say never. Nobody can exactly predict the market, right? And we are not here to give investment advice, but just looking at the charts, I'm fairly sort of confident with high probability that it's going to remain in this zone, and it's likely to test definitely these sort of lower points, maybe even come back to 14 before it finds a new price point, which either stays around here and remains bearish and further bearish, or goes back up. So that's something that, worth watching over the next few days.
Okay.
What I don't know, Paul, and I want to ask you this question is, did something happen to SNX? Like, why is this suddenly turned more bearish than even its cousins or comparables, right? Like, are we seeing a price correction? Maker is seeing a price correction, but just looking at the charts, this one seems a little more strong, if you may, a little more, certain as compared to Aave's, which certainly is getting there, but, it isn't looking as certain as SNX is, where it has turned bearish.
Yeah, the only thing that I can possibly correlate that to is just around Optimism's kind of delay in their mainnet launch. And I know Synthetics was one of the first big supporters of Optimism, and had already kind of moved some of their staking there, but the pressure on Synthetics to improve their scaling is definitely there. So let's see whether that pressure is still weighing on their shoulders when it comes to the price of SNX, or if they can still pull up from there.
Good point. Yeah, perhaps that's what's happening here. Okay, last one, Paul. Let's look at Maker. And then if there are more questions, let's take them as well. If there's any other audience questions. So the last one, Maker. Again, so if you look at Maker and Aave charts in terms of the way they're behaving more recently looks similar. The two moving averages are coming close together. Recall Aave's price movement. There was also pullback below the 50 MA, and then sort of price recovered. Maker seems very similar also. In fact, Maker's prices recovered a bit more, but again, it's not about specifics in individual price points, but just overall behavior. It does seem like I think there's similarity there. So yeah, these are again things to watch. I think we should come back to again next week. I think next week we might end up looking at some other asset classes, but we should come back here and see how these ones did.
Yeah, that's interesting, and definitely one for us to watch and see again from a DeFi kind of majors perspective.
Absolutely, yeah. Fantastic.
Right.
So I think this was fun. Now, what are we covering next time, Paul? What are we doing for the next session?
Yeah, I mean, for me, definitely having those new indicators and understanding a bit more about stochastic Fibonacci has been really useful from today's session. So yeah, I'd love to pick up another indicator to add to kind of the toolbox. In terms of the actual kind of content for next week, obviously that DeFi deep dive that we did was very popular, and people have asked for kind of more of the same. So I think, yeah, it's going to be interesting to look at those indexes. Perhaps also, if you're up for it, Shanky, kind of how the perpetuals markets actually, kind of react and adapt to in a way that's a little bit different to the spot markets.
Yeah, definitely we can do that. So I think let's study, DeFi again. Maybe we look at some of the newer DeFi action or the C DeFi action in BSC. And then perpetuals is a very interesting category at large, just derivatives at large. And we can look at how the movement in both the perpetuals and futures market and options impacts the spot price, especially in the world of crypto. Maybe that's relevant more for the majors, largely for Bitcoin and also a little bit for Ether. But definitely we could study both of them, look across exchanges, look at long versus shorts, open interest, just funding rates, try and study them, and maybe share patterns with our audience in terms of how to read them and what to do with it.
Yeah, that's fantastic. And as always, this is not investment advice. It's all for educational purposes. But if you have liked what we've shared today, yeah, please give it a thumbs up and subscribe. Either follow us on YouTube at Going Elliptic or on Twitter. And yeah, look forward to another installment next week. All right. Thanks, Shanky.
Thank you, Paul. Fantastic. Yeah, I'm glad we're able to bring this together, and more next week.